What's up, everybody? It's your boy Dave P with the cream. As always, I got my main man, RJ Pepino. If you're new to the channel, we are full-time real estate investors. The cream stands for cash flow, real estate, and money. And we are buying houses and buying properties every single day and taking you on our journey with us. Today, we have a very special guest. It actually happens to be the person that introduced RJ and I many, many years ago.
Oh.
We're gonna tell you that story just a little bit. But our main man here, our special guest today is Colin Egbert. He is doing some major things in the storage realm of real estate. So we're going to be getting into that. But first, we're going to get into kind of what's going on today. Here is May 17th, 2000. Is today the 17th or the 18th?
I think it's the 18th.
Today's the 18th. The markets are tanking across the board. The Dow Jones is down 1,100 points. The NASDAQ is down over 500 points. But more importantly, something that Colin has experience with, the crypto market, is pushing right up against that 29K support level. So we're going to talk about that a little bit as well. Colin, fill us in on what is happening in your world.
What's up? Well, first of all, it's awesome to be here. Dave, RJ, like what you guys have been able to do over the last, was it 10 years now?
You got a decade?
Sneak,
you got a sneak peek into the business today. You were in our office. Maybe you can kind of share what you've seen so far.
Absolutely.
Here in Columbus. He's in the studio, everybody.
Yeah, I am in the studio, but in the offices as well, like seeing actually like what you guys are doing. The organization that you guys have as far as like just having everything lined up, having the right people for the right roles, and willing to be able to find that power team and know that you got to pay and compensate and incentivize to have the people that you need that have the high skill set, but also that are going to stick around with you for the long time. And so one of the big things that you guys talked about is like, you know what we're really focusing on, not just buying good quality properties and the product, but really focusing on building the team and how important building the team is. And so, seeing what you guys have done with, bringing on a COO that's helping you guys with the operations, you're just looking at, okay, how can I be able to operate and we can be able to continue to grow without having all the wheels fall off. And the way to do that is with having organization, and not just organization, but the right people in that organization to be able to make it happen. And it's just what you guys are doing as far as the amount of contracts. You said you have like 30 some contracts and under contract right now. You guys are dozens of contracts, and that you guys aren't involved in it. You have the right team that are finding the leads, that are calling, that are qualifying all the way through, having the property managers. You guys have just really dialed in a system that is not easy to set up. There's a lot of moving parts. There's a lot of like different talents for different roles that you need to find. So being able to find those type of folks and plug it in like you guys are is really inspiring to see.
Yeah, Colin has seen us in the very, very beginning stages when we just got introduced back in a San Diego event that was, I think it was back in 2011. Colin actually invited me to the stage to do a quick testimonial on a software company that they were promoting. And that's how Dave and I actually met, because I'm from Columbus, Dave is from Cleveland, and so we connected after that event. So, there's power in going to these real estate events. For you guys that are watching this, you got to get out there, you got to network, meet new people, because that's the only way you're going to expand and grow. And Colin has seen us from the very beginning. So when Dave and I started the business together as a partnership back in 2012, it was just Dave and I. And he would come into town, he'd say, hey, what's going on, what's up, keep in touch with us. And he saw us in the beginning before we had the people, the processes, the building, the office, all this stuff. We were in half of a duplex, like with stacks of bills in the kitchen, trying to figure this out. And we just stuck through it, made some deals, had to make some sacrifices, lived below our means, get the right kind of people into the business, one by one, slowly by surely, and here we are. So it's coming full circle now, and I'm glad you're here.
Very grateful for the introduction. I met RJ obviously through Colin's event. He's well exposed to every facet of real estate. He's been around the real estate game for quite a long time, but now he's put his hyper focus into self-storage real estate. So tell us a little bit how you got started in the self-storage. Why did you choose the self-storage aspect of real estate, and tell us what's going on in that world today?
Yeah, absolutely. So for me, like getting involved in real estate, I got involved right out of college. I started, posting up the We Buy Houses signs all over the city, and whatever I could do to get the phone to ring. And it was just me, myself, and I. What you guys have seen, what you have done with your house buying, with your house flipping, with your house holding business. I mean, it's night and day to what I was doing, or like when you guys first started, what you were doing as well. And so, for me, real estate wasn't new to me, but I, back in 2017, got into crypto heavy. I was like, this is it, blockchain's the future. And I, went all in, and it was great. And I wrote it up. And then in 2018, I also saw how fast a hot market can go from, neutral to cold to crash, and the ups and the downs of that. It really taught me a lesson of, no matter how much you believe in an industry, in an asset class, in some type of investment, whatever it is, that if you go all in, then yeah, if you hit a home run and you knock it out of the park, that's great. But the fact is you go all in on something and then it switches, then all of a sudden that thing that you were so like that you were like, I'm gonna ride this to the promised land, all of a sudden that stops. And for me, I was like, I'm done with the ups and downs of crypto. I'm gonna continue using crypto as an investment, as something that I can throw in that, I'm gonna hedge myself that this crypto thing does take off. I'm gonna be, sitting well, but I'm also not gonna expose all of my assets, all of my have major exposure all in one area. And I was like, crypto is great as a side thing that you put some money in, but for you to be counting on that as your main business driver, it's ridiculous. It's not the way to go. And so that's why, I was looking after that. I was like, I want to do something that I can work now, that I can be able to put in effort now. And the Colin from 5 years from now is going to benefit from the efforts of today. I wasn't, my background, like Dave's, sales and marketing. I was always the guy, make the deals, close it, get the commission. And then the next month was like, all right, everyone's at zero. Let's go, close the deals, make the commission. And for me, I was like, that's not something, I don't want to create a job that I am this, cash generating machine and that I'm in charge of all of the revenue generation. I was like, I don't want to do that. It's when we look at the Kiyosaki, the employed, self-employed business owner, investor, you're really at the S, right? Yeah. You're in the self-employed, you're usually a 1099, and you're only going to be working. Yes, is it not salary? And so you can have some type of determination of what money that you make, but you only have 40 days in the week. You can only do so many sales calls. You can only close so much. So for me to be able to do something now that is going to benefit me in 5 years, 10 years, it had to be investing. And so that's why I was like, I want to get back to real estate investing. I was like, if I'm going to do it though, how and what method, what asset class? So I really took like 3-4 months and I just studied everything. I just studied triple net lease. I studied multifamily. I studied assistant living. I studied storage. And after looking at these main parts, these main asset classes, I was like, self-storage. I can identify it very quickly. I can be able to analyze it and do the quick due diligence, which me being the acquisitions guy, I don't want to have a 30-minute calculator of inputting things in order to be able to tell if a deal's right. Okay. I want to be able to understand, have a quick 5-minute call and have an idea if this is a deal or not. Yeah. And if I want to take myself out of it, which I now have for the majority of my acquisition stuff, I want to be able to train somebody, even importantly, that can do that basic level of analysis. And so when I looked at that, when I looked at just the value and that you can find these mom and pops that they want to just get out of the business. They're not interested in listing it for 6 months. They're just done with it. They want to find somebody that can give them a fair price, and they want to be off on their merry way. And that's really what we've been able to find. And so for me, those are kind of the reasons why I decided that, self-storage, I was going to put the blinders on. I was really going to focus on that. And that these other areas people are making lots of money on. You guys are crushing it in residential. For me, I was like, I'm just going to focus on self-storage. I believe in it. I believe that the way that this post-COVID world that we're all living in now, I think a big part, and we've already seen it, that a migration from these large cities, from these, penthouses that you got to pay, $4,000 a month on, that you can live outside of the city and for $3,000 have an entire house and backyard and all of that. I think a lot of people are really seeing that we don't need to live in the city in order to work a job in the city, because so many of these positions are going remote. And so we're seeing, and where we mainly focus on investing is the secondary and tertiary markets. So not fighting all of the public storage, the big boys in these primary, million plus type of populations, but really kind of going right around that 100,000 population, because we're not competing with all of these, REITs and these trusts and these larger organizations, these publicly traded companies, and we can find a niche with that. And so that's really what we've been focused on, and it's been going great, and that's really been the focus.
Colin, you've been in the residential space for a long time.
Yeah.
And so you've flipped a lot of homes, and what is like the main difference that you can see with single family homes and then working self-storage? Like, can you give us like 3 things that you can quick off the bat, like you see?
Yeah, absolutely. So for me, like, my whole thing is like, I know that there's certain roles and certain talent that I have, and there's a lot of things that I don't have. And so for me, I realize that in order for me to be as successful as possible, I need to have other people that can do things that I can't do, or I don't want to do, or I don't do very well. And when it comes to commercial, because you're dealing with these larger types of properties, when you're talking about, splitting a duplex that's making $300 a month between a partner, it's a lot more difficult to be able to have those types of economies of scale for me. And so for me, I was like, you know what, I know what I really want to do. I want to focus on acquisitions and putting deals under contract. And then I just want to send off, after I have that, find somebody else that can help with the financing of it and the asset management of it. Gotcha. And with commercial, it's very much structured, and they even have, basic frameworks of, if you bring this to a deal, this is what the worth is. If you bring this to a deal, this is what it is. So there was almost already kind of a structure in place for the dividing up the roles, and also dividing up how the deal is structured. Nice. And so that was a very big thing for me, is that we didn't have to worry about, okay, how are we going to do this? How are we going to chop it up? So I would say that would be a big thing, was having that kind of, it takes a team. There's a lot of entrepreneurs that are solo investors. They hire other people. But for me, I was like, I kind of want to work with this, just kind of like how you guys have seen the benefits of working together. I was like, I want to have other smart investors, other smart people involved in this, besides just people that I'm paying on staff. Yeah. I want to have that type of other relationship that we can bounce back off ideas, and someone can tell me, Colin, I think you're full of crap. I don't think this is a great idea. I think this is horrible. And you're less likely to get that type of real constructive criticism by somebody that you're paying a paycheck to every month. I mean, you can, but it's not, having that type of relationship has been really powerful for us, and for us to be able to grow. So yeah, that would be one thing. And then on the negative sides, though, is that these deals, they take longer. Like, they're longer to negotiate, getting all the due diligence documents, being able to figure out like what their unit mix is, how much, storage that they actually have, all of these types of things. It's a little bit more involved. So I would say that I believe that residential is a little bit more simplified, as far as you guys can check what the comps are. You can do a very quick assessment, especially with you guys, with your guys' experience on that. So that was one of those things, is that just to be more patient. That commercial, everything takes longer. The due diligence process, the negotiation process, the appraisal process, the financing, it can take a little bit longer. And for us, the way to solve that is by just having multiple deals that are in the pipeline at different stages, so that you can be able, who cares if you have that, 3-month, 4-month, 5-month, 6-month pipeline. If you have deals at different stages all along, then you always have something that's closing within, a couple weeks or a month or so.
So one of the common things that I've heard from self-storage guys is finding the mom and pop owner who's maybe a little bit behind on the times when it comes to their technology, how they're collecting money, how they're reserving storage units and things like that.
Yeah.
And what they do to add value to the asset is actually bring it up to par, right?
Sure.
Bring it up and technologically bring it up to the modern times, right? And another thing that I hear from storage people is new construction. So are you doing any of that, like either bringing properties up to modern times and or new construction?
Yeah, so a little bit of both. Our background and what we've been focusing on is buying existing self-storage, like you said. So the mom and pops, the folks that they don't have a listing on Google Maps. They don't have any type of mechanized gate system. They don't have any type of third-party management system that can take calls and fill units. Like they're doing it all by themselves. They're picking up the phone calls. They're putting on the locks when people don't pay. They're cutting the grass. Like they're doing all these different types of things. And we've all known this, that if you have a business where you wear all the hats, you will get burned out. Like it's not a question of if, it's a question of when. Yeah. And so we meet a lot of these folks that, it's made them good money, but they're just exhausted from having to do all the work because let's face it, most entrepreneurs, when they first do it, they think to themselves, should I take the time to put together a listing, to have somebody do this job for me? Or I got to get it done now. Let's just get it done now. Let's do it myself. And so you have these people that they would love to have help, or they maybe even have a budget for help. I mean, most self-storage facility owners, they're not going broke, right? They're all making money. They have some revenue. They might have some deficiencies that we can be able to increase. But at the end of the day, we're there to be able to take where they're at and be able to say, okay, how can we be able to increase the value of that? And the way that we increase the value is by raising the occupancy and then by bringing rates up to street rates. A lot of these deals, it might not be a great deal as with the amount of revenue that they come in, but for us, one of the ways that we've been able to take deals and be able to see some major value in them is that we do a rent comp analysis on any deal that we're looking at purchasing. We do that so that we can be able to say, okay, you know what, they're making this much, but everyone else in town is charging this much for it. And we can immediately move up to this price and maybe be a little bit less. And no one is going to take their stuff out of a facility, spend it half a day moving it, rent a truck, only to pay the same price that's across town.
Also, typically, isn't it just a small move up? So when you're approaching the people who are renting the storage, it's not like you're doubling their rent, but even small incremental increases make a big difference on a storage facility.
Make a big difference, yeah. And obviously that's dependent on how many units you have and how much the square footage is. But we're buying at a minimum right around 10,000 square feet. So if it's below 10,000 square feet, I'll look to sign the contract, aka wholesale it. And if it's above 10,000, then that's something that we'd be interested in looking at. And so that's really what we've been focusing on. So you're asking about the existing storage. So that's kind of how we look at the existing storage, as far as being able to look at where they're at right now with the revenue. What can we do to push it? Another thing is really important is there additional land to expand? Because if it is just a okay deal, but if it's in a great area, super high demand, low supply, everyone else in town is filled, then we're like, okay, we know we can build another 10,000 square feet on this property and it's going to get filled. And it's just because of basic supply and demand that we're able to see, with calling several storage facilities, spending 5-10 minutes figuring out where they're at, how much space do they have, and that's kind of a part of our process.
So it sounds like there's a lot of similarities with what I'm hearing with self-storage and like small apartments or apartments in general, where you can increase the rents in the apartment, and then at that point the multipliers increase. When you go to, if you're going to do that and you go to sell it, is it the same aspect of selling it on a cap rate, just like you would on an apartment? Is it the same in self-storage?
It is.
Is it valued like that?
It is, yeah. So cap rate is very much, part of the discussion when you're listing a property. However, it's not a discussion when you're talking to these mom and pop sellers, because they're not familiar with cap rate. They're not looking, they bought it, they saw the numbers that they can get, they see what their returns are. They're not talking cap rates. And normally, and I want to say most of the time, if they are talking cap rates, it's not a deal for us.
Yeah.
If they know, hey, well, I saw from LoopNet that it's a
They're
5 to
savvy.
7,
Yeah.
cap rate. If we're saying that, you know what, Mr. Jones, based on what you just said,
Yeah.
it sounds like you're looking for more of a retail buyer.
Right.
We're not a retail buyer. I'll tell you that right now. We're looking to be able to buy at a price that makes sense for us. We're not trying to, steal it from you by any means, but we do need to make we're not in business to pay, top dollar for the facility. However, what we can do is close it within the next 60, 90 days. You don't have to deal with a bunch of people that are going through it and having your broker constantly bug you for showings and this kind of stuff.
Yeah.
We can be able to handle it, and you can have your money within the next, 2 to 3 months tops. And so just let them know, and don't try to be all things to all people. Say, look, if that's what you're talking about, if you're looking for a 5 cap, we're not the buyer for it. It might take you 6 months to a year to sell it, but if you're willing to do that, you know what? I know a good broker, and just go that route.
So take us play by play of this big deal that you have on your hands. You don't have to give us like where you got it, but
Sure.
just give us some motivation. How'd you find the motivated seller?
Sure.
And then what you intend to do with the actual deal.
Sure.
Because we just heard about this, and it's a pretty big deal.
Yeah, I appreciate it. Very exciting. It's just something that really has happened over the last couple weeks that we made this decision. But I started marketing in March of last year. So that's when I started, sending out direct mail. We started working on doing cold calling and just figuring out how do we interact, how do we contact and speak to these sellers, what's the best way, and really was trying to learn it. So we started in March and we closed our first one right around the end of September, October. Is when we closed our first facility. So
how many units? How many units? It
was about 120. I believe,
okay.
For our first one, it was Arizona that we did, and we got in it for $650,000, and we're like, you know what, this was one of those ones where the price, the numbers were okay, but when we looked around, there was no availability, and all the current, all the other owners had 50% or higher. Some of the competitors were almost twice as much what they were currently charging. And we're like, oh my gosh, like we can literally, like within the next year, probably 6 months, we can raise it up 50 at a minimum to 100%.
It's amazing.
And just double it. And so when you do that, you're talking about doubling the revenue, doubling the NOI. I mean, it's all having a major impact on the bottom line. So, that was our first deal. We did another one in West Virginia that we bought for $905. And
how many units was that?
this one was this was like 24,000 square feet. And so it was like over 200 units on that one.
Wow.
Yeah. So this was West Virginia Nitro. His father died of COVID and was just like, he was out of state, and he was like, I just need to get rid of this. He's like, I have no knowledge of self-storage, none of it. And we're like, we'll make you a good deal on that. So picked that one up, and then we also...
So this is all like within a year.
Within a year.
Unbelievable.
100 units, then you got another 200 units, 24,000 square feet.
Yeah.
You were on a roll.
We were on a roll, bro. And then the next one we did in Kansas, this place called Clay Center right outside of Manhattan. There's a Air Force base there. I'd never even heard of these cities before, but the demand was there and the supply wasn't. So self-storage, and this is a really good piece, is self-storage is all about a 3 to 5, 7 mile radius. You can have a facility on the other side of town, and if there's a whole bunch of storage that's right there and it's all really high level, you can have a whole different economic situation than if you're on the other side of town, where in that 3, 5, 7 mile radius, that it is, there's no other storage there, it's really poor quality or whatever. So, that's what's really cool about storage, is that we don't just say, oh, we're just going to invest in these areas. We invest in the facility, and then what does the city look like? Is it growing in population? Is it not? But at the end of the day, what's that competition look like, and how's the demand look like? So we went Kansas, or that was Kansas, and then our fourth deal was Joplin, Missouri. This was our monster 55,000 square feet, 340 some units, and it was our biggest deal that we had done up to that point.
And you used, let me take a guess. You use none of your own money.
Yeah, so on all of these deals, and not to get too ahead of ourselves, but you know what we're listing this whole package up for $8.8 million. This $8.8 million portfolio that we're now selling, these deals that I just mentioned, we have been able to buy all of that, and we have used less. My partner and I have used less than $20,000 of our own money to buy this. And the only reason why we had to do that is because we had a seller financing deal with our West Virginia, and last minute the seller was like, no, I don't want to do seller financing, after he said he was down to do it. And so that was like a $90,000 swing that we had to, you know, kind of come up with some cash. But if it wasn't for that, we would have been able to say that, you know, we bought nearly $9 million worth of real estate without having to use our own cash.
This is amazing.
Yeah.
So you're all into this for right around like 4-ish,
3.5 is how much our debt is. Yeah.
Wow.
So our debt is 3.5.
All private capital.
So 3.5.
But a little bit of your own capital.
But 3.5. That 3.5 is all bank money. So we're getting 75% conventional financing we have a conventional bank that we use that is in Kansas that helped us with the Kansas deal, and then they also are helping us with all of our future deals. They're a nationwide lender. And so the beautiful thing about this is we're getting 75% financing from a standard bank. We're getting it for, you know, depending on when we bought these, but it was between 4.5 and 5.5, 5-year fixed, 25-year AM. And we're getting these incredible deals. So we're paying less than, you know, 5.5% interest. So then that 25% down that we have to buy, that we have to bring up to cover what the lender isn't, that 25% we're going and getting private investors for that.
Smart.
And so then on that 25%, because if you're getting 75% of that debt and you're getting it for only 5%, you can give these investors more because 75% of it, you have a blended amount. So, you know, with our investors, we're like, look, if this thing, and we bring them in as equity partners. It's not a debt, it's not a preferred interest rate. Like, we're bringing them in as equity partners. We're giving them anywhere between 8 to, I think, as much as 24% of the deal. So they get, you know, 8% of the cash flow, 8% of if we refi, 8% if we sell, and they're in it until we sell too. We don't, you know, we don't refi them out and then they're done. Like, we say, hey, look, you're staying with us till the end.
That's so key, because that's how you get your private lenders to lend more money to you, because you give a piece of the equity and it's like a perpetuity thing, right? So they get consistent monthly cash flow, because as a private lender, your biggest, you know, problem that you're going to have is, where do I put my money now? You gave it to me, I made money, but now I got to do the work and put it into another deal. Like, you know, so they stay within that deal and they keep their money going.
It's an easier sale for the private lender, especially in like an inflationary times. We talk a lot about inflation, obviously real estate and interest rates, but an equity partner from a lender perspective, it's better to be an equity partner because, you know, they get a percentage of all the upside if things continue to inflate. Their percentage is worth a lot more than just a straight up debt loan. In fact, inflation will wipe that debt out, right? It's worth a lot less. So that's great. And be willing to give equity partnerships. We've met a lot of newer investors and they're so caught up on what they have to give away that they never end up doing a deal.
Totally.
We've seen this before. It's like, I would never give up this person. Well, guess what? You never do a deal. So anyway, I was just making the point, it's an easier sale, in my opinion, to a private lender to become an equity partner in inflationary times, because their equity percentage is going to grow or inflate if the price of things continue to go up, or if you add value to this asset, which you guys are doing, and bringing it up to par, that equity percentage is worth more than just a straight up debt loan, because inflation wipes out a debt. It's a fixed amount, right? But what we've noticed with some of our students and some other newer investors that we've met through the years is they're afraid to give an equity percentage or even pay a high interest rate to a lender. They say to us, oh, when RJ and I first started, we were borrowing money at 12% interest plus 3 points. And we were sometimes giving up equity as well. But we didn't have any other alternatives, and we wanted to get into the game. So if you're brand new, don't worry so much on what you're giving up. Focus more on the fact that you're able to get into the game and start buying assets and taking things down. And that's what you've done. You've moved really, really quickly over the last 12 months. I got a question for you. What advice would you give to somebody else who is maybe looking to get in the game, whether get in the game of residential real estate or storage or anything? I mean, you've taken such a fast start.
Sure. Yeah. To get started, I would say avoid analysis paralysis like the plague.
Yeah.
That the whole idea of like, I got to analyze like what's my logo going to be? Like, F your freaking logo.
Right.
Like, what's your, like, all of these different things. Like, what do you need to do in order to get the phone to ring and start talking to sellers? Like, at the end of the day, like, from the point of you going from 0 to talking to sellers, and that's it. And whether that is beating up, the We Buy Houses signs and just trying it. I mean, that's how I got my start. And you guys have beaten up some.
Oh yeah.
Some
I think
We
there's
Buy Houses
signs that right
though.
now in Columbus, Ohio, that have been up there so high on the freaking pole, so they're so
still there?
lazy. It's just like a yellow sign, but you can still see like 3-6 cash. It's like crazy. But they work, right?
Yeah, exactly. Like, whatever it is, like, all these people, they kind of look, I gotta get this education, or I need to get the coach, or I need to get my business cards, or all like that. It's like, go out there, figure out how to start talking to some sellers.
Yeah.
And then don't penny pinch on the areas that you should penny pinch on. Like, going out and getting an office, like, right from the bat, like, forget that. Like, work in the extra room in your place. Like, all of these different types of things that, like, business people have, the espresso maker, the office, all these things, like, save that for after you make your first couple million. Like, figure out, invest your money, put your money into marketing and getting the phone to ring. And then after that, if you don't know what you're doing, find somebody like Dave, who's one of the best acquisition folks in the game.
Hands
Period. Find somebody that knows the game, and then figure out, do they have a program that you could buy, which is ideal. And then if not, if you don't have somebody that you have, like, find somebody local that, like, yo, you know what, I'm willing to help you out. Like, I'm going to do the same type of things that you are, but, I'm willing to work a deal. Like, I'll work for free, or I'll work for minimum wage, or whatever. Like, let me just kind of, if you guys have this abundance mentality, let me kind of just be here and do an internship or whatever it is. But start marketing, and then get the education in order to get the deal. Because if you have a bunch of leads, you're talking even to a couple of sellers, and you don't know what to say. You don't know how to be able to ask the right questions. You don't know how to be able to identify pain. You don't know how to, like, get that process. Then you need to learn that process. You need to get that education. So, invest in marketing, invest in education. Have somebody that is willing to do deal analysis. Like, when you talk to somebody, unless you really have a great idea of the market, like, you're coming from, being an appraiser, a loan officer, or a realtor, like, you're going to have a hard time figuring out, like, what is a deal at first. And so finding someone, again, that can be able to, like, look at those deals and say, you know what, here's the numbers, here's what it is, somebody that knows the area, and pay them for that service. And I know that you guys have a program where on Fridays, right, you guys can people can come and share deals and do that. That would be 100% what I would do. The way that I have been able to just take off, whether it was in residential or whether it was in commercial, is that I realized what I didn't know, and I realized what I needed to find out, and then I realized who I didn't have on my team, and then I realized who I needed to have on my team. And I just, in business, and I'm sure you guys are finding this out and doing this, you just figure out, okay, here's my current business. Where are the pieces that aren't, that I don't have? And you kind of look at your whole business as like a fabric, as a masterpiece, right? As this beautiful thing. Like, okay, what needs a little bit of touch up here? What needs that? And it's just about putting those right pieces together so that everything works well, and you have a beautiful masterpiece where everyone is working in sync, where everyone is doing what they should be doing and hitting goals and making money.
I want to comment on that, and I want RJ to comment on that, because he's actually much better at that skill set than I am personally. But there's a certain amount of humility or being humble that it takes. And you're how old? You're 39, 40?
42.
42,
yeah.
Right? You've been through years of business, and we see this a lot with younger players in the game. They enter, and they want to do everything themselves because there's this certain badge of honor or pride that is carried with them. Like, look at this, look what I did on my own.
Yep.
And it takes, years of experience, and we experience this as well in our business, and you become humble, and you start to realize, it's like, guess what? I'm not great at everything,
Yep.
but I'm good at a few things. And then when that humility comes in, you can actually start to find people who are really good at the things that you're not self-admittedly good at.
Yep.
And that's something that RJ has done within our business, is really just grab the bull by the horns when it comes to hiring and building a team. And maybe you can comment on that a little bit, RJ.
Yeah, you can only get so far with your efforts. You can get to a certain level. Then there's another level where you have to start focusing on building a team around you so that you can't do all the sales all the time. You can do that in the beginning to get revenue in the door. What Colin was saying is you got to focus on the marketing and sales aspect of that so you get the phone ringing, right? Then once you get revenue coming in, then you can get your first hire. Then you get more revenue coming in, then you get your salesperson. Then you build on that. But in order for you to actually get to that next level of being a business owner, you have to train those people that you hired to become leaders. You need leaders in your organization to get to that level of being a business owner. Because if you're answering the phones and putting out the fires and doing the direct mail campaign and then doing the rehab management, you're always going to get stuck. There's that ceiling that you're never going to hit because you're doing everything. You have to delegate. You have to invest in systems. You can invest in business consultation. That's what we did. There was a part of our business at one point in time where we weren't good at rehabbing. So guess what? When you're not good at something, you go and hire consultants to come in your business. They show you how it's done, but you know how it's done. So then you go find that person who's going to run your play. That play is the project manager. Then they're running the play. The biggest hire recently that we had is a high-level COO that understands processes, understands how to manage people so that you don't have to run the day-to-day. We need to be up here. As business owners, you got to be up here looking down at your business health stats, that's your KPIs, to make sure that you know where the business, what holes in your business you need to plug in for that week, that quarter, that year. So hiring the right people will get you to the next level. Then you got to build leaders. The people that are in your business, you got to continue to pour into them.
That's what I was just going to say is invest in these people. Once you attract these people and be willing to invest in them. And that's self-admittedly something that I am more reluctant to do. It's like, my gosh, another 6-figure salary we're bringing in here. How are we going to pay for this? And then RJ more so grabs the bull by the horns and says, look, we can't move forward with the business without this. We need this position. And then after they get in, you pay for top tier talent. But once you bring them in and you can see what they can do, it's like a private lender. You're going to have to pay equity or pay to play. But once you do it, now you're in the game and you're doing deals. Same with us, bringing on a COO and paying a big salary. Now looking back, it's like we can't operate on the level that we are operating without these individuals. So it takes a certain amount of humility, and it sounds like you entered the self-storage space. Probably it came from all of your previous experiences, leading you up to where you're at right now. But what you've done is nothing short of massively impressive.
Okay. Appreciate that, brother.
And, any closing thoughts or final words for anyone who might be watching this?
Yeah, so if you're watching this, first of all, kudos to you, because that means that instead of Netflix or all these other things that and admittedly I watch as well, that you're taking time to learn from some of the best, and these guys are some of the best. I've seen them grow over the last 10 years. First, kudos for taking the time to educate yourself. Now, here's the big twist: is there's lots of people, there's millions of people that are watching content and that learn and that get that knowledge, right? But the successful folks are the ones that take that step to learn, and then the second, which is to take action. To take action knowing that you're probably going to mess some things up. Take action knowing that you're probably going to piss some people off. Take action knowing that people around you, when you start taking this action, they're going to be like, what? You're doing this real estate thing? Oh man, the market's already so hot. Knowing that you are going to get heat and pushback from people in your life, that they might be doing it with the most right intention, being that they're thinking that they're saving you from doing something that's going to take away time from them, if it's a significant other, or that you're going to be spending a bunch of money that you're not going to be able to recoup. And so they look sometimes and they give you that type of advice, quote unquote, but at the end of the day, they don't know what is going on in your head. They don't know the education that you have received. They don't know the opportunities that you're obviously seeing. So, it's not something where you got to be like, okay, I got to shut them out. Just be very conscious of who you take advice from when you're in this very transformative time period of going from where you are right now and where you've been and saying, look, I'm going to keep on getting the results that I'm getting if I keep on doing what I'm doing. So I need to shift that action in order to get the results that I want. And so that's I think that's a big piece. Take action on it. Put those headphones on. Any type of negativity, know that it's working. These guys have been doing it for a decade now, and get that education and take action. So that's what I would share, my friends.
Awesome, Colin. How can people get in touch with you if they want to learn about self-storage, maybe get involved in some of your deals?
Yeah, absolutely. Email probably be the easiest. Colin at Valor, VALOR, selfstorage.com. So you can shoot me an email if anything that stood out, or you had a question on something. Feel free to reach out. Self-storage is an awesome industry. I love it. But again, everyone has their thing. Everyone has what they're good at. But it's really done well for me. And yeah, I'd say that. You can also go to Instagram and you can look up Colin Andrews on Instagram. And that's it. That'll work.
This has been a presentation of The Cream, Cash Flow, Real Estate, and Money. Make sure you like, subscribe, share, leave us a comment or a question. Much love as always, and we'll see you on the next video.
See you on the next video.